Welcome to this video. In this video, I'm going to be doing an analysis of waste management. Now, if you like this video, please don't forget to leave a like and subscribe. And of course, remember, this isn't financial advice. It's purely for entertainment and educational purposes. Now, waste management, you might think, well, why is this an exciting stock? Well, I'm going to show you. Let me just make the graph a bit bigger here. Let's just take days. As you can see, all the way back from 2015 and even 14 and 12, as you can see, this stock just rises nicely. And that's because, of course, they're in waste management, which is garbage trucks and so on and so forth. And everybody needs their garbage picked up. So that is why it's an amazing stock. I personally think it is one nice just have a small position, maybe 5-6% in the bottom of your portfolio, because they also pay out great dividends. Now, let me just make it normal again, this one. Now, as you can see, even all the way back from 2023, let me just show you here. As you can see, in October from 2023, it was $80 cheaper. Now, that is a quite nice increase since that point. So this has performing quite nicely. Now, it has been a bit of a bumpy ride this past year or so, which is quite unusual for a company like this, because as you can see, it has a very small beta of 0.18%, which means if the index it is in moves 1%, well, they move 0.18%, so not at all. And now, as you can see here, the dividend yield indicated is 1.41%, and now the current dividend payout is 1.31%, so chances are it's going to increase, at least that it has been indicated. Now, the earnings on this stock are quite decent. Sometimes they miss, sometimes they hit it, as you can see here, but they missed by quite small and beat it by quite small. So I think they are quite on the nose on this one. As you can see, we have two red E's here. Overall, these earnings are quite nice, and then we have another poor earnings here, down by 2% again. So really not that poor. Now, the annual earnings on this, as you can see here, it's just rising and rising and rising and rising, and so are their net margins. And that's, of course, because people need their garbage. Now, you might think, well, who hires waste management? Is it the government? No, it's actually not the government itself. It is the cities. So there are some other competitors for waste management, which is a great thing. And you might think, well, why is that great? Well, that means they have to improve their product and improve their service and just be great. Because if there are other competitors, well, then they can't be lazy, because otherwise those competitors will just come in and snatch up the market. So as you can see, it's great to see them just increasing their margins and their earnings year by year. Now you can see down here in the financials how they make their money. As you can see up here, East tier, West tier, and other ancillary, but this is just if it's East Coast or the West Coast. So let's see if we remove these. As you can see, really not much in between. And as you can see, they have also been in a lot of other stuff, but currently it is just categorized as East tier and West tier. As you can see here, they are primarily in the United States. They're also a bit in Canada and some places in Western Europe, but I don't really think that's going to be quite important. As you can see here, they only make $100 million in Western Europe. But of course, it did increase quite a lot from 2023. So maybe they're just going to increase more and more, which would be quite interesting to see. And I think they're going to rise quite a lot if they can really break through into the European market. But the one problem there is a lot of European markets are dominated by government-owned waste management companies. Now, as you can see on the seasonals, let's just go back to 2010, like so. Look at this performance. It is absolutely amazing. This is the only stock I have been able to find which performs even better than the S&P 500 year over year, which is quite incredible to do. So I like this company quite a lot. Now, I don't own any stock at the moment, but I do think a person should own this. So I am actually going to go out and buy some when the technicals get a bit better. I want to see this increase a little bit more. Now, the technical is for the day neutral, and for the month it is a buy. But over here in the oscillators, as you can see, it is still a sell. So I want to see it get a little bit better, and I want to see it increase a bit more here in the RSI. Now, if you don't know what the RSI is, that is the relative strength index. So if it's between 70 and 50, it's moving upwards. If it's between 50 and 30, it's moving downwards. And if it's above here or below here, it's oversold or overbought. But I want to see it move a bit up in the RSI, just continue. At least at that point, I'm going to buy up myself, because I want to get in when the iron is hot. And as you can see, even though we do have some golden crosses here, it has been going a bit downwards, so we might see a death cross soon. So I want to see a bit better upwards momentum. Analyst rating on this are quite amazing. We have 13 strong buy, 2 buy, 12 hold, and 1 sell. So overall, just absolutely amazing. And as you can see, their EPS is just estimated to be increased more and more and more year over year, as they already have done. And as well, their annual earnings, as you can see, just increased more and more and more. And chances are they're also going to do that with their dividends as well. So of course, it is just a great company all in all. Now, if you like this video, as I said, please don't forget to leave a like and subscribe. And remember, this isn't financial advice at all. This is simply my opinion and my analysis. But if you want to see more of those on my channel, please leave a companies in the comment section below which one you want me to take a look at. Thanks for watching.